This is the tax return problem for Chapter 10. Ryan Ross, Oscar Omega, Clark, and Kim are equal active members in Rock the Ages LLC. Rock serves as an agent and manager for prominent musicians in the Los Angeles area. Their federal ID number is blah, blah, blah. Uses the cash basis and calendar year and began operations on January 1st, 2017. Its current address is 6102 Wilshire Boulevard, Suite blah, blah, blah. Let's go down to the very bottom. Okay, so we have to prepare Form 1065, pages 1, 4, and 5 for Rocket Ages using the tax basis information for Schedules L and M2. Provide any special information that LLC members might need, including net income from self-employment and information for the 199A calculation. Attach additional statements as needed. And then we're just doing one Schedule K1 for Ryan Ross. Okay, so they give you all the tax info. I pulled up the book. This is the book question, so we can see the information. And then, of course, they have the tax return in the program. I also have that open. Let's see where it is. No, that's not it. Is it this one? Okay, so they give you all the tax return stuff here, but this was such a small window, I decided to go ahead and pull up the form off of irs.gov and type the answers in on there. You'll be putting your answers in on this one. But I feel like you can see, I can see this one better. Okay, so you need to enter your answers in the homework program. I'm not doing that. All right. So let me scroll back down. All right. The principal business activity is musician agents. I don't know if I spelled that right, but I don't care. Musician agents. Principal product is agent services. And their business code is, pretty sure they told it to us. Business code 711410. All right, the name of the partnership is Rock the Ages. All right, all the names in here are kind of like actual stars or movies. They just changed them up a little bit. So name of partnership is Rock the Ages. They live at 6102. Well, they don't live. It's their address. Wilshire Boulevard, Suite 200 or 2100, Los Angeles, California, 90036. Their employer ID number is the 55555556. I don't know if I did that right, but anyway. And they started business 1/1/2007. All right, their total assets, I don't know if we can do that quite yet because they didn't give us all the information for the balance sheet. So we'll have to come back and finish that off. All right, they use the cash basis of accounting. And I think that's it for the top. Well, I guess you would have 4 here, but we're not doing all of them in actuality. You would have 4 Schedule K1s, 1 for each partner. All right, so back up to the revenues and expenses. All right, so their gross receipts are $4,800,000. And that's just, they don't have any cost of goods sold because they're like a service firm. Am I on the right line? Yeah, I think so. Total income. All right, there's salaries and wages. This is all coming from over here. So their salaries and wages are their employee W-2s. Guaranteed paymenters. That is this 800,000 and the 600,000 added up. All right, Ryan Ross is the office manager. He gets 800 million or 800,000, and the other three get 200,000 apiece. All right, let's see. Repairs and maintenance. They didn't have any of that. Bad debt. They didn't have any of that. Rent. They have rent of 80,000. They have payroll taxes of 92. So that's taxes and license. They have interest on an operating line of credit of 10. Okay, sorry about that. I was having some issues. Okay, so we had a couple of items that were picked up individually, some expenses that were picked up individually, but they have a lot more expenses that we need, and they're going to go down here on this other deductions. So we need to attach a statement for that. So I pulled up Excel so we can add them up. All right, so we're going to have the advertising of 380,000. Let me make these like this so I know that I've got the right number in there. Okay, so advertising. Charitable contributions go elsewhere, I think. So section 199, section 179. We already have the wages. We already have the guaranteed payments. The meals go on here, but they're subject to a 50% disallowance. So we only get half of that. We have travel. Oops. What is happening? I don't know. Okay, we have travel of 320. Then we have legal and accounting of 132. The rent was separately stated. The interest was separately stated. And we had insurance of 52. Office expense of 200. That's not the other number. Payroll taxes were separately stated. So then we have utilities of 54,800. Those up. Okay, so then that 1,238,800. 1,238,800. That comes over to here to other deductions. 1,238,800. And it's statement 1. I can't type over there on this one, so anyway. All right, then we want total deductions, so we need to add those up, and it comes to $382,800. All right, and then our ordinary business income. Did I put enough? I don't think I put enough there. Did I? $382,800. All right, so then $4,008,000 minus $382,800. I'm sorry, I did it again. Equals $979,200. All right, and that's that for that one. All right, all these random questions are no's. So these are all, this is a domestic limited liability corp, and these are all no. It's all dealing, I think, with foreign stuff and ownership and other. Lots of questions. No. Guessing they're all no. Yep, all no. Okay, so the Schedule K. Now remember, the Schedule K is where you put like the totals of everything, and then it's allocated out on the Schedule K1s based on their percent ownership. So this is basically information from the first page, plus a few other things, because if you notice, they have some tax-exempt income here, and they also have some interest, taxable interest, and some stock sale information. And that was not on that first page that we just did, right? That is not part of the self-employment income or the business income. It's a little bit different. Okay, so this ordinary business income, this actually comes from up here. Is this $979,200? All right, then we had guarantee payments to partners, and it was all for services. That's $1,400,000, and it just comes on over. All right, we had interest income of $1,600. That's the $1,600 right here. All right, and then we had some gains and losses. So this was up here, all down here, I should say. Below, they had, on June 15th, they purchased 1,000 shares of tech stock for $100,000 and sold them on December 15th for $80,000. So that's a short-term loss of $20,000. And then on March 15th of last year, they bought some stock for $136,000. They sold it in December 15th of this year for $160,000. So that's more than a year. So that's long-term. And it would be 160 minus 136. So that's a $24,000 long-term gain. All right, their Section 179 deduction is up here in this paragraph. They did some remodeling for $20,000, and they want to do the Section 179 deduction. Instead of depreciating it, they want to just write it all off this year. So that's $20,000. All right, their contributions are up here on the expenses, $28,000. All right, the net earnings from self-employment, that is the $979,200 plus the $1,400,000. Okay, these are not earnings from self-employment. It's just the $979,200 plus the guarantee payments. All right. They didn't have any of this other stuff, but they did have tax-exempt interest income of $3,200. All right. And they did have some of this other stuff here too. They had the not tax-exempt interest income. They have non-deductible expenses. This is half of the meals. So 100,000, half of the meals. And they had investment income of 1,600. That's that taxable interest from the banks. Okay. All right, so analysis of net income or loss. Let me make this bigger. And you literally can do what they have here. You add up lines 1 through 11, and then you subtract lines 12 through 13D and 21. So if you go up here and you add up the 979 plus the 1,000,004 plus the 1,600 minus the 20 plus the 24 minus the 20 and minus the 28. Right, that's what you're doing. And that is 2,336,800. All right, then we have the balance sheet. All right, let me make it smaller again. The beginning balance we have in full. All right, so 44,4. Tax-exempt securities, 120. Marketable securities. I think everything else is just going to have to be that 436. That's going to have to be an other current asset. All right, and then we have the buildings, 960. They're fully depreciated. So this ends up being a 0 over here. All right, and the total should be $1 million. All right, operating line of credits. That's actually an other current liability. And then their capital accounts, 2,468, add up to 800,000. And there's $1 million. All right, the end of year, I don't know my cash yet. I'm going to plug it in a minute. All right, so our tax-exempt securities are still 120. Our marketable securities are now 300. And our buildings are 980 and 980. I believe cash, because what I'm going to do is figure out the stuff down here and then plug in cash so that it balances out. So this went to 160. And I don't know this yet. I'll do this in a second. All right, then we have a Schedule M1, very similar to the corporation. All right, so we start with the net income or loss per books. They told us up here net income per books is $840,000. All All right, guaranteed payments to partners were $1,400,000. All right, and then we have expenses recorded on books but not included on Schedule K1. That was the $100,000 of meals. So you add that stuff up. All right, we had tax exempt interest of $3,200. That's the only thing we have there. So you do well, I have the wrong thing here. 840. Let me add it up. 840,000 plus $1,400,000 plus 100,000. This is actually 2 million. Gosh, 2,340,000. Minus 3,200. 2,336,800. Okay, then an analysis of the partners' capital accounts. They started off with 800,000 total. Net income per books was 840. That is the $1,640,000. Okay, distributions. They each member withdrew $250,000 cash during the year. So 250,000 times 4 is $1 million. So 1,640,000 minus $1 million is 640,000. All right, so when we go back up here, this 640,000, that's the partners' capital accounts at the end of the year. Okay, so then $1 million, not $1 million, what is that? 160,000 plus 640 is $800,000. I'm back up on the balance sheet. So my total assets have to equal 800,000. So then 800,000 minus 300,000 minus 120,000, and they must have had cash of 380. Okay. All right, so that's it for the basic 1065. All right, I also want to do the Schedule K1 for Ryan Ross. We're not using, well, I'll even pull up some of the other forms. But let me pause. All right, so I accidentally closed out my 1065 with the Schedule K. And you refer to the Schedule K when you're doing the Schedule K1 for the partners. We're only doing it for Ryan Ross, but that's fine. So I pulled up the Schedule K, the answer, so that's why it looks a little bit different. All right, so we're just doing it for Ryan Ross. So we've got a regular calendar year. So we don't need to do anything with that up there. So our number, bunch of 5s. I have no idea if I have enough, but it's okay. Rock the ages. Okay, sorry, I had to pause, but let's get back going. All right, so the partners SSN is over there in the, the beginning info. It's Ryan Ross, and y'all can fill in the rest. He's a general partner. It's a domestic partner. What type of entity is this partner? He's an individual. He has a 25% share in everything. All right, his share of the liabilities, that's that, they had that operating line of credit. It's 25% of that. So 50 and 40. All right, his beginning capital account was 200. Okay, so let's see if I can find that stuff. Oh, here's the liabilities. So 200,000 at the beginning of the year, and then 160,000 at the end of the year, and he gets a quarter of that. All right, so the capital accounts, you're gonna look at this analysis of partners' capital accounts, and he's got 200,000, and then current year net income is the 840 times 25%, so 210. And then withdrawals, he took out 250. He took out a quarter of that million. So his ending is 160. Did the partner contribute any property with built-in gain or loss? No. And that's it for that side. So now we're back over here. All right, the ordinary business income is that 979,000. Let's go up here back to the Schedule K. Okay, it's the 979,200 times 0.25. So 244,800. His guaranteed payments, that was stated separately. He got 800,000. Total guaranteed payments were 800. They had interest income of 1,600, and he gets 25% of that, so 400. So that's right here, 25% of that 1,600. Then they had a net short-term capital loss, so he gets 25% of that 20,000. And then he gets 25% of the 24,000. This 9B, this is the tax-exempt interest. 3,200 times 0.25. Actually, you know what? I think this is, excuse me, nothing goes in 9B. The tax-exempt interest income goes up here in 18. So we've got A, it's the 3,200 times 0.25, so it's 800. Where are they saying A? Let's see. So it's A and C. Do you see that? And then C. and C is the meals. So he gets 25% of that. So 25% times 100,000. All right, and then distributions of cash. It was a total of 100,000. He got 250 of it. So that's A, because that's what relates over on 19. And then 20A, and he gets 25% of that 1,600. All right, then there are other deductions down here. Let's see, I need to put something there. All right, they had charitable contributions of 28,000, and did I already do the section 179? Did I put that somewhere? Oh, it's right here. Section 179 deduction. He gets 25% of that. So 25% of 20,000 is 5. And then the other deductions is the contributions. So it's A. And he gets 25% of 28,000, so that's 7,000. All right, self-employment earnings. Where is that? Up here. Okay. So the self-employment earnings are the 244,800 plus this 800,000 that he got in guaranteed payments. So it's A, and then 1,044,800. And I think that's it for the Schedule K. Then, let me just show you on here. They also did the gain or loss, the capital gain or loss form. So it's this form 8949. And this is pretty straightforward. You've got the short-term gains or losses. So you put the information in for the short-term loss. And then you've got the long-term gain and losses in part 2. And you put the information in for the long-term. All right, and then those numbers come forward to the Schedule D. All right, Schedule D is capital gains and losses. So you have the short-term listed first, and then the long-term. All right, Schedule or Form 4562 is your depreciation. All right, they're electing to depreciate 20,000 or expense 20,000 of it out. So that's what will go on that form. There's that statement 1 that we already did. Statement 2 just has the charitable contributions. Marketable securities, the line of credit, that's the other current assets and other current liabilities. And we didn't really have to do these, I don't think, but Statement A is the qualified business income pass-through. And then here's the Schedule K one that we already did. All right, so I think that's it.